at this point as we head into the overnight session and tomorrow. On the upside, we're going to be using 56, 20 to 30 as short-term resistance, and we will use that as the intraday bull bear zone in the overnight and heading into tomorrow. Now, if the market is actually weak, then ideally we don't really want to see the market going back up into 56, 20 to 30. Ideally we hold the resistance that was built up during the day over here. So the ideal situation would be that we don't even go back up to the 20 to 30 area, that we actually hold below the 11 to 1775 roughly, right? So ideally we hold below 56, let's say 1075 to 1775. That would be the best situation for anyone who is bearish on the market, which we still are. So as long as ES is holding below 56, 20 to 30, we can still maintain our neutral bearish view. If we look at the larger time frame chart, you can see that essentially what we saw today was a test of this bottom of range or bottom of balance that the market broke down below a few days ago. So we had established, this range over here, and essentially today the market just tested the bottom of that area. You can see this is like a breakdown area right over here as well, and we got pretty close to the 50% retracement of this larger swing. So now if sellers are going to step back in any meaningful way, we don't want to see today's high being taken out, right? So we have this low here at 31.75. So we really don't want to start breaking above today's high and, above that 29.5 to 33.5 zone. We want to see the market holding below this if we are now going to get a move lower. And if we take out today's high and we start breaking above that 29.5 to 33.5 zone, then at least for the time being, the downside may be done. A break above today's high and above 29.5 to 33.5 could lead to a accelerated move into the swing highs over here. So if we take out this resistance now, then the market could set up for a accelerated move into 56, 55 half to 65 half. And then, we may still stall over there. But this is really going to be the key area right over here. If we are going to head lower, then we really don't want to see this area get taken out. And that's why it's going to continue to act as key resistance. And it's really going to help us determine our bias heading into tomorrow. On the downside, we still need to see a break below today's initial support to really get that bearish indication from the market. So a break below the aggressive support would be the first sign that ES is now failing. It would essentially be a break of this developing trend. And then if we take out this swing low, that would confirm that idea. And that would then open the door for a push down to the lows into 55, 40 to 50. So if we take out today's RTH low, the aggressive support zone, that could then be the beginning of a move that takes us down into initial support. And then if we take that out, because the door would be open for that zone to break at that point, then we could go back down to 40 to 50. And then maybe we get some buying here, or maybe the bearish pattern continues, and then we just continue heading lower. So right now the market is at this key inflection point, and on the upside, 56.20 to 31.75 I think is going to be very key. As far as resistance goes, below that, there is still the possibility for sellers to step back in with some force, and above that, we could have a accelerated move into at least the 56, 55 half to 65 half zone, if not even higher. So that is going to be the focus in the overnight session. Aside from that, let me see if there are any questions that we can quickly cover, and then we will wrap up.